Bitcoin for all.
Over 15 years ago, Bitcoin was born as a revolutionary idea. Ever since, it was gone from an unknown concept to becoming one of the most commented subjects in the world. Nowadays, many have already heard of Bitcoin or have some opinion about it. Unfortunately, most of people, Bitcoin is still seen as just a nerd thing, a risk investment, or something that's only good for financial speculation. This limited vision ends up ignoring its true purpose and enormous potential, being accessible money for everyone. Something that not everyone realizes is that Bitcoin wasn't created just for investors, tech geeks, or big companies. It was designed to be a fairer and more transparent financial system. It's money that anyone, anywhere in the world can use. Bitcoin is a powerful tool for protecting wealth and guaranteeing financial freedom. Today, more than ever, it's important to understand how Bitcoin can make a difference in your life. With inflation rising, money losing value, and people trusting banks and governments less and less, Bitcoin presents itself as a reliable alternative. Money that's really yours, that no one can block, confiscate, or devalue for no reason at all. With Bitcoin, you can become your own bank and no longer depend on intermediaries to store or control your money. Bitcoin is not just a currency and a technology. It's also an invitation for us to rethink our relationship with money and how we can build a new financial system, one that's freer, safer, and more accessible. When most people think of money, they immediately think of paper notes or numbers in their bank account. In other words, most people's understanding of money is directly linked to its control by third parties, such as banks, brokerage houses, or values created by governments through central banks on paper banknotes. Bitcoin is different. It's digital money that doesn't depend on governments or banks, which means that you don't have to trust these institutions that have failed many times throughout history. Although the idea of digital money may seem new, it's actually the result of centuries of research, trial, error, and learning. Throughout history, several brilliant minds, physicists, Austrian economists, computer engineers, and investors unhappy with inflation have imagined that one day something like Bitcoin would exist. Nikola Tesla and Henry Ford envisioned the creation of energy-backed money that could promote peace. Friedrich Hayek and Milton Friedman, both Austrian economists, point out the problems of leaving monetary policies in the hands of governments and how a digital money moved freely could bring more prosperity to people by being resistant to corruption and unstoppable. Notice how Bitcoin, in a way, has always been there as an idea, waiting for the right time to become reality. But what these geniuses of the past didn't know was how exactly this digital money would be created, or what technological advances would make it possible. The ones who took the first steps towards Bitcoin were the cypherpunks of the past. Since the 70s, these cryptographers had been trying to create money that could be used on the internet. But the thing is, none of the projects worked as expected. That's why it's said that Bitcoin didn't emerge overnight. It's a discovery that was ready to happen. Bitcoin is the result of 40 years of research and previous attempts. Over time, several projects have paved the way for the creation of Bitcoin, each contributing a piece of the puzzle finally put together by Satoshi Nakamoto in 2008. That's why many people say that Satoshi Nakamoto, the creator of Bitcoin, didn't invent anything, but rather discovered Bitcoin. This is because Satoshi learned from the failures and successes of these early projects, and this knowledge was crucial to create something that actually worked. Okay, so how did Bitcoin come about? The first records of Bitcoin begin with the email dated October 31, 2008. On that day, an anonymous cypherpunk with the nickname Satoshi Nakamoto announced on a crypto mailing list that they were working on a paper about a completely peer-to-peer electronic money system that is without the need for trusted intermediaries. In that email, there was a link to Bitcoin's white paper, a document of just 9 pages that describes how the Bitcoin network technically works. The white paper explains how digital signatures send and receive transactions, how these transactions are grouped into blocks, and how proof of work, throughout the use of computing power, solves the problem of double spending while simultaneously generating new coins as a reward for network participants, in the process known as mining. Double spending was one of the biggest challenges towards creating digital money. Many cypherpunk projects of the past failed precisely because they couldn't solve this problem without centralizing control of the network. But what even is double spending, right? Double spending is when you manage to spend the same currency twice. To give you an example, it would be like paying your bill at the bakery with a $20 bill and then having it reappear in your wallet so you can spend it again. That would make the system useless as money. The word Bitcoin appears only twice in the white paper, in the title and in the link to the website. The word network, though, is mentioned 21 times. This shows how focused Satoshi was on the architecture of this peer-to-peer network and how it would work in a decentralized way, without depending on intermediaries with decision-making power over the protocol. Satoshi also made the Bitcoin white paper available on the website bitcoin.org, where it is still available today, translated into more than 40 languages. A curious fact is that the bitcoin.org domain was registered on August 18, 2008, a few months before the publication of the white paper, which shows how Satoshi was already preparing the ground to present his creation to the world. It is usually possible to find out who registered and owns the domain, but Satoshi thought about everything and kept this information anonymous. Satoshi Nakamoto's decision to remain anonymous is one of the most intriguing aspects of Bitcoin's debut. The exact reasons behind this choice are unknown, but several theories have been raised. To this day, no one knows who Satoshi really is. It is not even known if Satoshi is one person or a group of people. In the end, though, it doesn't really matter. The fact that Bitcoin has no known creator is actually a good thing, since it reduces any noise between their personal life and Bitcoin itself. Satoshi's anonymity helped Bitcoin to grow as a truly global, decentralized, and organic system without the need to depend or be tied to a central figure. Satoshi Nakamoto stayed active for a few more years, working on the code and exchanging ideas with other cryptographers regarding Bitcoin. Then, in April 2011, Satoshi handed over control of the Bitcoin.org website and Bitcoin repository to the developer Gavin Anderson. By merging cypherpunk projects from the past, Satoshi has climbed on the shoulder of giants and then went one step further by making Bitcoin a reality. Bitcoin is the result of the combination of several technologies. Separated, these technologies would lack the characteristics and properties that make Bitcoin unique. It's this union that has made it possible to create something so revolutionary. The first technology Satoshi used was timestamps. Timestamps are records of date and hour that create a timeline, like a time chain, that cannot be modified. This timeline is essential to ensure that records cannot be altered. Many people know this timeline as blockchain, where blocks of information are connected to each other. These blocks record transactions immutably and in the order in which they occur, guaranteeing the integrity and transparency of the system. Satoshi also used cryptography and cryptographic algorithms, such as SHA-256, to make the network work securely and throughout codes. This means that only those who have the correct key can move their corresponding funds. Cryptography is a fundamental technology in the Bitcoin network as a whole. In addition, Satoshi incorporated peer-to-peer network concepts, where anyone can run a node and connect to the network without having to ask anyone else permission. This principle is the basis of decentralization and network architecture. The nodes connect to each other to form a distributed network for verifying and storing transaction records without ever depending on institutions or intermediaries. This architecture is what guarantees the system's independence and resilience. Satoshi also used proof of work, which guarantees that it's not possible to simply create money out of the thin air. You need to prove to the network that you have solved the problem, followed the consensus mechanism, and that you deserve to receive coins as a reward for having provided a service to the network using your computing power. There is no way to falsify proof of work, and that's what brings trust to the network. It ensures that the rules of creating each block of information have been following the consensus that the entire network follows. This mechanism is the basis of Bitcoin's integrity. Also, Satoshi has set a maximum limit on the number of coins that can be created, 21 million units. This limit is reached through a mechanism called halving, in which the issuance of new coins is halved approximately every 4 years until the last coin is created. This maximum limit is what gives Bitcoin unique monetary properties, in addition to its digital characteristics. It reflects fundamental economic concepts such as scarcity, ensuring that Bitcoin cannot be inflated arbitrarily, as it is the case of government-issued currencies. This characteristic makes Bitcoin a solid and predictable store of value. Finally, Satoshi also kept the entire Bitcoin project open source. In other words, the project is open and public. This means that anyone can check it, collaborate in its development, and even copy the code. This decision made Bitcoin radically transparent, something that no central bank or traditional monetary system offers. Transparency is what allows public verification and free access for anyone, anywhere in the universe. Bitcoin is the most accessible, inclusive, and open network ever created, offering equal opportunities to everyone who wants to take part. Before Satoshi, no one had combined all these technologies into a single protocol. In Lesson 4, on how Bitcoin works, you get a better understanding of each of these points. 2 months after sending the email to the cypherpunk mailing list, launching the website, and making the white paper available for anyone to check, collaborate, or even copy, Satoshi mined the first Bitcoin block. This first block, mined in January 3, 2009, is called the Genesis block. Satoshi received 50 Bitcoins as a reward. The most curious thing is that this block contains a message, a quote left by Satoshi himself. The Times, 3 Jan 2009, Chancellor on brink of second bailout for banks. This is the headline on the cover of the British newspaper The Times on January 3, 2009. This cover right here. This quote shows how the history of Bitcoin is directly linked to recent major global crises. Bitcoin emerged just as the 2008 crisis broke out as a response to the manipulation of the economy and the centralization carried out by central and commercial banks. The quote from The Times was not for nothing. It reinforces the criticisms of the traditional financial system. This report pointed out that in 2009, the British Chancellor was going to rescue a failed bank for the second time. This gives us several clues as to why Satoshi created Bitcoin and what he thought about the financial system. In messages written on internet forums, Satoshi demonstrated a deep knowledge of the workings of the economy, viewing Bitcoin as a completely opposite alternative to the traditional system. This led to the creation of a decentralized currency that cannot be confiscated, monopolized, or devalued by any government or bank. For all these reasons, the way Satoshi launched Bitcoin to the world was based on fairness. All Bitcoin were created following the consensus of the network, without pre-mining. Pre-mining happens when creators of a project issue a number of coins to themselves before the network even starts running. This ends up creating a disproportionate privilege for creators and founders. Besides that, the white paper was published before the first block was mined, in a completely transparent, public, and open source fashion. This gave more people the chance to collaborate or even copy the code before the Bitcoin network even started working. Bitcoin operated for almost a year and a half without any monetary value. It literally wasn't worth a penny. This allowed coins to circulate freely and the network to decentralize itself organically. The growth of Bitcoin network was totally organic because it had no initial funding, no venture capital participation, and no expectation of profit. It was a protocol maintained by cypherpunks who were figuring out how that whole pile of code could work and evolve. Also, unlike all the other founders of digital currency projects that emerged afterwards, there is no record of Satoshi even selling a single Bitcoin. After creating Bitcoin and building the foundations of the protocol, Satoshi Nakamoto disappeared without ever making a profit. Satoshi created Bitcoin, an invaluable legacy to humanity, and never took anything in return. Since then, Bitcoin, which initially had no monetary value, has hit new heights with every upward cycle. As of right now, while I'm recording this lesson, it has $100,000, appreciating more than 7 billion% in dollars since 2010, when it began to be traded and priced by the first online platforms. The price of Bitcoin attracts attention and arouses curiosity, enchantment, and greed. In reality, its valuation is a reflection of the growing adoption of a new financial system. For the first time in human history, we are witnessing and documenting the birth of completely digital money independent of governments and banks. Bitcoin's great appreciation reflects its growing demand. With that, price can also tell us a story. It displays the ups and downs of Bitcoin's price, but symbolizes above all the impact of its revolutionary technology over time. Bitcoin's history is full of remarkable events. In just 15 years, a lot has happened, and these past events help us understand how we can better deal with what lies ahead. Well, you already know the first two milestones. The white paper was released in 2008, and in 2009, the Bitcoin network started running. In 2010, the first Bitcoin transaction took place. It even became a commemorative date, Bitcoin Pizza Day. On May 22, 2010, Laszlo Haniak paid 10,000 Bitcoin for two pizzas. The pizzas at the time were worth $25. Today, those 10,000 Bitcoin pizzas would be worth billions of dollars. But Laszlo's gesture was as much more than a simple payment. It reinforces the importance of Bitcoin as money that can be used on a daily basis, supporting its essence as a peer-to-peer tool. Although it may seem like a mistake by Laszlo and a waste of good money, when looking at it in retrospect, Pizza Day highlights the importance of adopting and circulating Bitcoin as money. Laszlo showed that Bitcoin can be used in a practical way without depending on banks, exchanges, or intermediaries. To get Bitcoin, all you have to do is find someone willing to exchange a product or service for Bitcoin. It's the most sovereign and independent form of negotiation between two people. Another important milestone in Bitcoin's history took place in October 2013, when the Silk Road platform was shut down. Silk Road was an online marketplace on the deep web that allowed people to trade in a wide variety of products and services using Tor and Bitcoin. Created by Ross Ulbricht, Silk Road aimed to be a truly free market where users could trade anything anonymously based on the principles of consent and privacy. It was a bold experiment in an unrestricted market, where people were free to exchange goods and services without interference from governments or corporations. Silk Road offered hundreds of products, equipment, services, and even drugs. All the products and those who worked on the platform were paid 100% in Bitcoin. On that time, a Bitcoin was worth around 50 cents on the dollar. The aim was to be like Amazon or eBay, only totally free and backed by Bitcoin. However, the success of the platform caught the attention of the authorities. Silk Road was eventually closed down and its founder, Ross Ulbricht, was arrested and sentenced to life imprisonment. This is because although Ross had good intentions, Silk Road quickly became a marketplace for trading drugs and illegal products, even though the platform had internal rules prohibiting the sale of these items. During the operation, the US government seized more than 200,000 Bitcoin from Silk Road, making it, ironically, one of the largest holders of Bitcoin in the world. Ross's sentence is seen as disproportionate, unfair, and politically motivated, especially since lighter sentences have been handed out in similar cases. Ross's case has also raised a global debate about responsibility of a website owner for the behavior of its users. Although Ross's family managed to raise $1 million to pay his bail, American judges did not approve his release anyway. Throughout time, and with the better understanding of authorities about Bitcoin, Ross's sentence was pardoned and he's free now. Another major milestone in Bitcoin's history was the launch of the Lightning Network white paper, a second-layer solution for fast and cheap payments based on Bitcoin. The Lightning Network started running in 2017 after the Segwit upgrade, allowing Bitcoin to be used as a currency on a daily basis, reducing transaction costs and increasing speed without sacrificing the security and decentralization of the main network. The SegWit segregated witness update, which happened in 2017, was one of the most significant changes in the Bitcoin protocol. This improvement has brought greater scalability, security, and flexibility to the network. SegWit reduced the weight of transactions, which lowered fees and paved the way to the development of the Lightning Network. The activation of SegWit was a result of years of debate. Despite being significant change, it did not alter the fundamental properties of Bitcoin, since it was implemented as a soft fork, guaranteeing compatibility with the protocol's previous rules. Another important milestone took place in 2020, when MicroStrategy became the first public company to adopt Bitcoin as part of its cash strategy. This decision attracted the attention of investors of all profiles, reinforcing Bitcoin as a store of value in the corporate market and boosting its recognition in the financial world. In 2021, Bitcoin underwent taproot activation, which also facilitates transactions, scalability, and reduces data usage. On that same year, El Salvador became the first country in the world to adopt Bitcoin as legal tender, showing that it is possible to migrate to the Bitcoin standard at a national level and inspiring other countries to consider this path. As early as 2023, the Nostr protocol began to gain traction. Inspired by the principles of Bitcoin, Nostr is geared towards social networks and online content, allowing people to take back control of their own data without relying on large technology companies, known as big techs. In 2024, two major events marked the history of Bitcoin. The first was the launch of the first Bitcoin ETF in the US, which broke earlier trading and growth records, further consolidating Bitcoin as a mainstream financial asset. The second was a historic statement by the former US President Donald Trump, who promised to create a strategic Bitcoin reserve, highlighting Bitcoin's global recognition as an economic and strategic tool. In just 15 years, Bitcoin has grown much faster than any company, commodity, or country. At the same time as rescuing ancient monetary properties, it has seen exponential adoption even faster than the internet itself. This is what appears in this image. The dark gray bars show the growth of Bitcoin, while the light gray bars stand for the adoption of the internet since the 90s. Today, Bitcoin already has the same number of users as the internet had in 1999. If the internet became the main tool for accessing information, Bitcoin could become the main tool for accessing value without depending on governments or banks. Even though it is growing faster than the internet, Bitcoin is still in its early stages of adoption. The adoption innovation graph is a classic model used to explain how new technologies are adopted over time by people. It divides the users in 5 groups: innovators, early adopters, early majority, late majority, and laggards. The most challenging point of this model is the chasm that appears between the early adopters and the early majority. This chasm stands for the critical moment when an innovation stops being something niche and becomes a technology that is widely accepted and used in everyday life. Many technologies don't ever cross that chasm. In the case of Bitcoin, the chasm stands for the transition between those who adopt Bitcoin out of ideology, curiosity, or specific interests, such as innovators and market enthusiasts, and the great mass of users who will only adopt the technology when it is perceived as safe, useful, and easy to use. Bitcoin is at its critical point, at the beginning of the process of crossing the chasm. Even when we compare Bitcoin with other asset classes, it becomes clear how small it still is and its enormous potential for growth in market capitalization as more people adopt Bitcoin as an asset and as money. In this image, we can see how Bitcoin currently has only $2 trillion in market capitalization, while other asset classes such as real estate, shares, and gold have tens or hundreds of trillions of dollars. Bitcoin is a new class of asset and money, as well as a new financial system, fully decentralized and open source. If it continues on this trajectory, Bitcoin could reach or even surpass the market value of several other traditional asset classes. But the main point is that Bitcoin tends to keep appreciating because it's simply better money. To understand why Bitcoin is better money, it is important to look at the evolution of money throughout history and how it has lost some of the fundamental properties. Bitcoin has the potential to rescue these essential properties and deeply transform our relationship with money. It can revolutionize in the way we save, invest, and transact by offering an alternative that is transparent, resistant to manipulation, and accessible to all. Bitcoin solves many of the problems of the current financial system. Millions of people are suffering from inflation, negative real interest rates, confiscation, and even having their accounts closed by banks, not even knowing how Bitcoin could be a solution to protect years of accumulated work that are being drained in government money, which melts like an ice cube. So, in the next lesson, we explore these problems in detail and you understand why money, as we know it today, has literally been programmed to steal value from people without them realizing it. So, see you next time.